The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome to The Trader's Edge. I'm your host, Steve Rhodes. Thanks so much for joining me, folks. I absolutely love being here with you. And it is wonderful Wednesday. Hopefully you're off to a wonderful start of your day. If you're not, just change it just like that in a heartbeat. It's all about your focus, folks. You know, if we take a quick peek around the markets, you've got a little bounce underway here in the Dow, trading up about 50 points plus. You got the ES Mini up 7 points. You've got the NASDAQ up 13. Russell 2000 up 0.3%. King Dollar just went negative. How could that be? I guess Tom brought the king back with him from New York City. You got gold trading down $15 right now at $15.41. That's bouncing off of the lows all the way back out there. We're going to take a look at that today. You've got silver down 57 cents right now out of $27.51. Light sweet crude down about $1. If we take a look, folks, yesterday, actually, before we go into the markets, I was talking about, the importance of being able to have some long-range goals, because when you have long-range goals, folks, it helps you overcome the short-term obstacles. But wait, before I get there, we do appreciate everybody listening to us on the radio. You can always watch us on TigerTV, or if you're hearing this show on the radio, you can always catch the archive on Channel 9, and you want to be able to watch the archives because learning is so visual, and you'll be able to see some of the charts that we're taking a look at. So long-term goals, folks. The question is, do you have any long-term goals or outcomes that you want to achieve? Because when you have those long-term outcomes, folks, they help you overcome those short-term obstacles. Now, here's the cool thing. When you start working on your goals, guess what happens? Your goals start working on you. And if you go to work and you've got a plan, the plan, folks, starts to work on you. So whatever good things that we end up building up in our life, folks, guess what? They build us. So that's what it's all about. Make sure you've got some good long-term outcomes. We're going to take a look at long-term outcomes in the marketplace, what the likely possibilities are that are out there. Actually, with the exception of the euro, a relatively orderly market. We're going to go take a look at the ES Mini in a moment. We'll take a look at the 10-minute chart. I'll just simply show you the AB equals CD patterns that are out there. That's part of what I'll be teaching on Friday. We've got a great class size. Would absolutely love to have you there as well. I mean, if these markets are a mystery to you, if you believe that there's no order, that it's difficult to be able to trade these markets, then attend this workshop, folks. We're going to show you today, but you'll have a full 30 days with this workshop being archived on your computer, on your homepage, so you'll be able to certainly go back, and you'll always have access to me. You can give me a call, listen to the show, send me an email. I always get back to each and every one of my clients out there. Now, when we left yesterday, or at least when we left I'm pretty sure it was during this show it had to be during this show, excuse me, or the Money Masters show when we were taking a look at the Hang Seng last night. Excuse me, looks like I have a little frog in my throat. We'll get rid of that frog in a moment. And when we're taking a look at the Hang Seng, we're looking at that 3 drive to a bottom pattern. Now, like any pattern, you want it to confirm itself for you, because you can learn as much from failure as you can from success. I think you can learn more from failure. And we take a look at the Hang Seng. Hang Seng was down a whopping 3% last night, a little over 3%, 634 points. So that is what I call, if you're looking at us on Tiger TV, that, folks, is an absolute failure of a 3 drive to a bottom pattern. That says the Hang Seng wants lower price, big time lower price. And if you really take a look at that, where is it headed to? Well, certainly the 0.786 area of this last move up, but I would say even much lower than that. You'd really want to go all the way back into the swing point. In this case here, we know in our U.S. markets, we're looking at October 4th. In the Hang Seng, it happens to be the October 4th date as well. And we were looking thought maybe it was going to be the U.S. markets that handed it off to Asia last night that would start the pop in the marketplace. Apparently, Asia didn't want any of that hot potato, and no wonder why, because it wasn't too long after our markets closed that the euro continued to tank. And we'll take a look at the euro-U.S. dollar. It really is all about the currencies out there. Let me just go ahead and wipe a couple of these things off the screen, then I can give you a better idea of exactly where the Hang Seng is headed to. That didn't work. Let's try that again. Get rid of this here. I guess what I actually have to do is hit the delete button, folks. That would absolutely help. So we're going to go from the lows of the October 4th swing point on the Hang Seng. That low happened to be 16,170, all the way up to the high that was put in on February 29th, celebrating David White's birthday. So it's headed now down into the 18,200 area. That would make a lot of sense. Why, folks? Because that's going to take you down to the January 9th area. It's going to take you down, almost, well, it's going to take you right into that January area where you had the markets breaking out. If we go take a look at, so let's go take a look at the ES Mini. Let's go take a look at some order that's out here in the marketplace. So we're going to pop up the 10-minute chart on the ES Mini. We're going to draw our A to B equals CD pattern on the way down. Our A point, folks, is starting at the high that was put in. Now, the reason why I'm choosing this swing point is that it's a major intersection. It's where you see a total change in direction of the market, polarity, whatever word that, you might want to use. That came in on the 10-minute chart right up here at the top. That's at 4 a.m. 4 a.m. on yesterday, May the 15th. The high out there of that swing point happens to be 1347 even Steven. That's your A point. I'm going to use as a B point right here down at the 9:20 a.m. time frame yesterday morning when it got down to a price of 1330.50. The B point when the market pulls up into the highs at 10:30 right at the 1341.50 area. You will see that a 1 to 1 A to B equals CD was in that 1324 area. But as the market moved down there, you did not get a bullish confirmation that the move was over. The only possible bullish confirmation you got was a small little hammer right here that occurred at 20 past midnight this morning. But it did not have the follow through, so it told you, absolutely told you, that the move for the 1-to-1 was not over. And, in fact, that's what happened when you go. It's just like riding an elevator, folks. If you just picture it, this is, you got to have some good metaphors or similes in your life. And when it comes to trading, you just simply want to understand the elevators that are out there, the contractions, which are 382, 618, and 786. And you want to understand, folks, you want to absolutely understand the expansions, 1.272, 1.618. There are a couple others, but if you just understood those two, you would be in excellent shape here. So you don't make it to one floor, you're going to go visit the next floor. This is just like a fishing exercise. This is about being a treasure hunter. This is about having a plan ahead of time. Because you have a plan ahead of time, you don't react until you get exactly what it is that you want. So you go down, that next area is 1320. You got down to 1320 at 240 this morning. Actually, the low there, 1321. No candle signal at that stage. You came down, you revisited it at 340 in the morning. You got down to 1320.75. Oh, you got to love that. And then, because now you really got down to your price target. And then on that next candle, again, this is a 10-minute chart, folks. It works on every time frame. Yesterday I was showing you FCX. I wasn't necessarily showing you. It was during the last segment of Tom's show from 4 to 6. And I was showing FCX. Was just take a look at a long-term chart. Longer-term A to B equals CD patterns. Doesn't matter what you trade. I simply show you the futures contract this morning and showing you on shorter-term time frames so you can understand the order of the markets, the patterns that are out there so that you can trade. It doesn't matter what the actual symbol is that we're looking at. These charts work the same on everything. So you get down, as I said, to a low of 1320.75 at 340. You follow that up with a bullish engulf, and you get a confirmation signal right after that. And now what are the markets doing? Well, you make an ABC down. You start making an ABC up. That's exactly what the markets did. The A point here, we go down to the low that was put in at 340. That's our A point. Our B point, folks, is going to be right up here where it makes the high at 4:40 a.m. When it did that, it got up to the 1329.75 level. Now, as it's making a retracement, and you got to love it, what's this candle right here? What's that little candle right there? That candle, as we see, coming into the session of 6:10 this morning. You got it. That was one of my hammers. One of my hammers after making a retracement. What kind of retracement, folks? 0.618. It doesn't show right here, but I could draw that on the screen for you. That's why you want to understand those areas. You get down there, it makes Steve's hammer. You then get a confirmation, tells you your A to B equals CD is underway. Now, we don't know where it's going to end. We don't know if it's going to be a 1-to-1, a 1 to 2 points, a 1 to 1.272, 1 to 1.618. We don't need to know. All we have to do is just simply wait and watch and let the market give us a signal. Well, folks, in this case here, it works, as I say, on all time frames. You got up to that 1-to-1 area. That was at 1333. You did that this morning at about 8:10 a.m. What's the next candle do? Swoosh! Right on up there, one big swoop from the 1-to-1 to the 1.272, and then it just kind of hangs out. Look at that, hangs out, pulls back a little bit. Now what we're doing is, or what the market's doing, it's at that 1 to 1.272, folks. Says that the futures want to trade a little bit higher here. The next level would take you up into that 1338 level. It's as easy as learning your ABCs. Just think about it, folks. In life, communication was learning how to count numbers. It was also learning your ABCs. Your parents taught you. School taught you. Come on back to school, folks. I'll teach you the ABCs and how to communicate with the market this Friday all day. If you can't make it, it'll still be archived on your members page. It's something you don't want to miss. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Something just popped across my screen. Poor Jamie Dimon. He's being sued by some shareholders, of course. Don't you think we knew that when they increased their legal fund up to $8 billion? Yikes, that's one heck of a legal fund. Folks, if your kids are attorneys, go find out if they can get a job for the folks at J.P. Morgan uses. Let's go to our first caller. Let's go to Tom in Tampa. Tom, thanks for calling. Thanks for holding.
Hey, Steve, how you doing?
I'm doing great. Yourself?
Good. Hey, Steve, I heard you mention the other day you feel like this pullback on gold could go back to 1150, even the 1100 area.
Long term. Long term. Yep,
okay.
Yes, I do.
All right. Steve, yeah, and nothing's going to get there overnight.
Yes.
I mean, I'm sure we're going to have some fat bounces on the way. What do you think these equities are? Are they going to go back? I think I heard Tom maybe say a month ago that he felt like these equities could maybe go back and touch the 2008 lows and take off from there. Is that kind of what you're seeing on this, or do you think?
Well, yes, I think that's certainly one. That's one possibility. When we take a look at a number of of good equities that are out there, they're already trading. When you go to the monthly charts, they're already trading inside the swing point that would take them back to those prices. Now, what happened in the overnight hours is just really as predicted, because you're inside a swing point. So it's really the same principle here. And, now it doesn't matter whether you're on a monthly or you're on a daily chart. Now, what I happen to have up on my screen, Tom, is the gold contract. And on September 26th was when we had one heck of a down swoosh in the gold market. We went from a high of 1666 all the way down to a low of 1535. So 130-point move that day. What we did in the volume down there was 359,000 contracts. Now, the low was 1535. What you actually did in the overnight trading was you got down to a low of 1526.70. You don't have that type of volume today, and so it is very possible that what gold will be doing is setting up this longer-term trading range that we're in. The low of it being that 1535. We've been calling that for quite a while, perhaps all the way up into the 1700s. But we need the market to prove itself to us and tell us what it wants to do. And for my work, it'll be paying attention to what today's candle is, but then tomorrow, what type of confirmation. And the reason that I say that is that if you just simply on the daily chart, I'll go ahead and post it on my screen here for you as soon as I can find that study. There we go. And we're just going to take a look at the moving average here. Now, the moving average that I'm actually going to punch up is the 50-day and 200-day. That's what they would call, the death cross, especially on the daily chart. And what you also had happen in the overnight hours is you had the 50-day cross through the 200-day. That is as bearish. And that's a lagging indicator. Okay, so it's but it's an indicator that you should absolutely be aware of. And so now, I've been calling for the pullback because of taking a look at the weekly chart. That the 1100 area is just nothing more than a 0.618 retracement. So to me, it's just reading the chart. I don't really care what it is that's behind it. It's what does the chart pattern show. And now you've gotten a confirmation with the 50-day crossing through the 200. Last time that happened in gold was all the way back in September 2008. So isn't it interesting? You were asking about the 2008 time frame. And now I can just simply go to a chart and point out to you last time that you had the 50-day cross through the 200 on a daily chart was back in 2008. So, we may just simply be getting a little bit of a bounce here. You would expect that when any equity or anything that you're looking at comes down and tests a swing point and rejects that on later volume, you would expect some type of bounce. The question is, what type of bounce is it that you're going to get?
Mm-hmm. And the thing about what blows my mind is, we could pull all the way back to 1100 on gold and still be in a bull market. I mean, that's...
absolutely, because really all it would be doing is setting up the longer-term A to B equals CD. You know, if we pull up that weekly chart here, and I'll pull that up for you to take a look at, also on Tiger TV. And what I want folks to understand is, this, when you take a look at this trend, and this bull run here in gold, this is a 45-degree angle, or close enough to it. This is really a beautiful setup as you've watched gold continue to move up along that line. So if we just simply take a retracement, going from the low back where we started October of 2008 all the way up to the high that was put in on September 9th. That's a good day. September on the weekly chart. September of 2011. 1450 is really your first area. That's your dead cat bounce. That's your 0.382 area. Now, you've broken that trend line. So that 1155 is nothing more than the 0.618 area. What that sets up, though, is longer term. That says that what you can see in gold is a price of, let me get it shorter here. See if I can do it. It's going to get into the 2,000 range, that's for sure. About $2,400.
Yeah, and that's something. Wow.
Hey, Tom, stay tuned, folks. We'll be right back.
Okay, thanks, Steve.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 41 points, up 0.3%. The S&P's up 6, almost 0.5%. The composite up 11, 0.3%. Small caps up 0.4%, up $3, trading out at 780.76. You got Microsoft down 5 pennies. Intel is flat. Google up 5 3/4 points, up 0.8%. Cisco up 1.5%. That's up 25 cents. Apple, trying to get back to the top of the swing point, trading up $1.82 right now. Pop into the upside, you got Sina Corp, SINA. They're up 13%. That's up $6.96 or so. Google right behind. That's up $5. That's up, as I say, 0.8%. You got Radware, RDWR. They're up 8, almost 9%. That's up $3.30. You've got Orasure Technologies, OSUR. They're up a whopping 30%. Is there any kind of buyout or something going on there? Let's see here. No, it looks like they just got some positive news from on an HIV test. So they're up a nice 30%. You got Cabot Oil and Gas, COG. They're up about 5% this morning. Fossil, FOSL. Don't go near that stock. Up 3%. That's up $2. Amazon is up 90 cents. To the downside, Abercrombie and Fitch. I think that's it, right? Fitch, not Finch. They are ANF as a ticker symbol. They're down 12% this morning. Must not have turned in very good results. They did release numbers, I believe it was before the bell. Let's take a quick look. They net sales $921 million versus $836, so that's not too bad. Earnings per share, where did that go? How about let's take a look at net income? $3 million versus $25 million. Holy shnipies. I'd say that is down just a bit. No wonder they're trading off 12.5%. Right behind them, J.C. Penney. They got rid of their dividend yesterday, trading down 14%. That's down about $5. Novellus, NVLS. They're off 3 3/10%. You got CLAC, KLA-Tencor. CLAC, CLAC is the ticker symbol, folks. Down $1 and change. It's down about 3.5%. Lam Research, LRCX. Oh, these are some of the old high flyers out there. LRCX down 3 6/10%. Tata Motors, TTM, the ticker symbol. They're off 4.5%. What did Tata Motors have? Nope, nothing that I see on the horizon news-wise. Oh, Taxi. How about that? Medallion Financial, TAXI. Wonder what in the heck they really do. Taxi, though, is the ticker symbol. They are off about $1. It's about 4 and, wait here, that's about 8%, almost 9%. Let's go to Lou in New Hampshire. Lou, thanks for calling. Thanks for holding.
Good morning.
How are you today?
Not bad. How are you?
I am doing great. Thanks for asking.
Yeah, I shorted TNA.
Okay.
I'm looking for it to fill the gap at 47.50-ish.
Well, let's take a look here. Now, you could have one of your other options that you would have had also is to have gone long TZA versus shorting TNA. But let's go.
Right, I have that too.
Oh, you do? Okay. You're all over these small caps. So you had a nice little pop-up this morning. What I'm going to first do So you've got this for more of a longer-term trade, meaning maybe a couple days. It's not a day trade. Is that correct?
Yeah, it's a couple of days, maybe till Friday.
Okay. So what I'm going to first do then, that being the case, instead of taking a look at the shorter-term, noisy 10-minute or 5-minute chart, what I'm going to switch over to is the futures contract. And we're going to take a look at the Russell 2000 futures contract. Now, the Russell 2000 yesterday, the day before, closing below March 6th. In this case here was actually, March 6th. That swing point low, 783.70. Also closing below the April 10th downdraft. The low there was 780. You actually closed out the session yesterday at 777. How about that? That was a James Bond number. You got to love that. Okay. Well, okay. Now, so what it's really trying to do, the futures contract is trying to make an A to B equals CD down. That would take it in the 758 range. What else do we have at around 758? Well, what you've got exactly at the high of 768.40 is you've got the October 27th swing point. To me, that is where you're going to have to start making a trading decision, assuming that the market doesn't, pop up and have some type of conviction today. But if we continue to see this downtrend, which I suspect we will, right now the market is popping just simply because the dollar finished an AB equals CD up pattern. And as you do, when you do that, it just pulls back a bit. So where the small caps are headed to, when I take a look at the futures contract, is October 27. If we go over and take a look at the actual index now, the Russell 2000 index, and I'll do that here. I'll put that up on the screen. Give me a minute to pop that up. Russell 2000. I got the monthly. Let's go take a look at the daily chart here for you. Times daily. And the reason why I bring that up really is because, if you can't pay attention to the futures contract, you can get down there, test that October 27th area, overnight, early in the morning, and so you might have your signal even in the pre-market that you might need to close out that trade. So in the case of the Russell 2000, which might be easier for you to access, it's looking like it wants to get into the 769.46 area. If we go take a look at the IWM, that ETF, the daily ETF, we're going to take a look at what the October 27th swing point is there. October 27th, the price that you're going to be looking at is 76.97. So let's say it happens just simply during normal trading hours. What you're going to want to see is how the small caps, how the IWM handles the 76.97 area. From a bearish standpoint, you want to see a close underneath that. Now, that's got 129 million shares. The small caps have had nowhere near that kind of down thrust on the way down. The largest down thrust that the small caps had was 101 million shares on October 10th. Again, that 110 going against 129. But otherwise, ever since then on the way down, there has been kind of fumes, if you will. That doesn't mean that it can't trade lower. And as long as you close inside October 27th, below 76.97, then what that sets up as, because these markets are going to work in tandem. So the small caps are going to be the first one to test the October 27th area. And they're going to release some information. If you close inside there, it says the small caps, IWM wants to trade to 74.85 instead of the 76.42, which would be completing a one-to-one A to B equals CD pattern. So I think you're good. And what you should do is you should pay attention to either the Russell 2000 futures contract, the Russell 2000 index, or even, it might be easier for you, just pay attention to the IWM. Okay?
Excellent. Thank you very much.
Yeah, my pleasure. You have a great morning.
Yeah, thank you too.
All right. So let's go take a look at right now. You got the Dow 27 points, S&P's up 4. I mentioned a few things out there. I mentioned the King. So let's go take a look at King Dollar. Speaking of the King, I think Budweiser is actually down 74 cents today, down 1. This Bud's for you. And let's go take a look at this Bud's for you. Let's go take a look at the ABCD pattern that King Dollar completed this morning. We're going to start off with the swing point down on February 29th. The low out there is 78.12. Our B point is right up here at March the 15th when it gets up to 81.16. And that C point being right down on May Day. May the 1st when it got down to a low of 76.67. And A to B equals C to D. And you want to understand those ABCD patterns, folks. 81.71 is the price projection. And what does it get to? 81.75. You got to love this stuff, folks. Now, all that the king has done is pulled back just a little bit. You can expect the king maybe to go test the 8204. That's nothing more than the January 13th swing point high. That's making 100% move of a move. But if you were short the euro, long the U.S. dollar, just because it completed this one-to-one does not mean you would get out. In fact, you wouldn't. You would want to let the market tell you that the move is over. No reason for you to second guess. You may give up a little profit, by waiting, but you may gain a whole lot more profit just simply by waiting. Make it easy, folks. Have a plan. Understand these patterns, understand the candle patterns that are out there, and just simply trade it as a business. If you do that, folks, it is the ultimate of plans out there. You will create your money tree. If we go take a look at what the King dollar is really all about, the euro being about, 57% or so of the U.S. dollar index, and we take a look at the euro. I've got a weekly chart on my screen here. Now, what's key here on the weekly chart is going back to this August, the week of August 27th. The week of August 27th, meaning August 24th and 25th, were two back-to-back P index dates. One of those days, the 24th, I believe, was a 15 and P index date, and the 25th was a 3 P index date. Two back-to-backs, folks. Those were powerful. Now, tell me how that works. See, I don't know how it works. I just know that I plot them on the charts, and I go back and take a look at history and see if they tend to have a reversal change, and then wait to see. Well, we had one heck of reversal. You had one heck of reversal in the euro. Take a look at the euro. The euro tumbled all the way down from the highs in 2009, November 27, 2009. The euro traded out 151.4. Moves all the way down into the June time frame of 2010, gets down to 118 and change. Then it starts to make its A to B equals CD. Look, you can just draw this pattern here. Come off of the swing point low up to this swing point high. Right down there, what do you get? You get a 1-to-1 A to B equals CD. You see, folks, doesn't matter what chart it is you're trading. Doesn't matter whether it's a currency, a commodity, doesn't matter the time frame. Just time and time again, you want to understand the ABCs. It's the beautiful thing. It's how we began our life, understanding ABCs, and it's how you communicated. Makes sense that the market communicates the way that we all learned how to communicate, in A, B, C, D patterns. In fact, isn't it start out A, B, C, D, E, F, G, right? You got those first four. And it even fits the Chapman wave. It even fits Basil's pattern. And today is Wonderful Wednesday. After this show, you've got Tom and I doing the Money Master Show. I believe it's Tom and I doing the Money Master Show. If not, I'll be here for you. And then we go up to Newton, Mass, to Basil Chapman, all the way out to Tucson, Arizona. We go visit Larry on his ranch out in Tucson. And then, as we do on Wednesdays, come back here from 3 to 4 for the David White Band. And he is the warm-up band for the Tom O'Brien Show. Now, just kind of digress there. What's real key here, folks, is this weekly chart. You're trading inside this weekly candle here of August 27, 2010. In order for the euro to bounce, in order for King Dollar to start pulling back, and I can certainly make the case for that, bear markets have bounces. What the heck? We just had one of the largest bounces that you've ever seen. We've gone from the highs in 2007, and you made almost a 0.786 retracement on the New York Stock Exchange, all the way up into May of 2010. That was one heck of a move. Of course, here's the danger. That could have been the A to B to C, and we might be in that C to D leg on the way down. And that's what you want to be paying attention to, because when you see gold, the death cross, last night, this morning, crossing that 200-day, putting gold now in a long-term bear market, folks, that's a signal, isn't it? And isn't that real signal there that the king is alive and well? The king is back because gold is just simply measured in dollars. Now, there's going to be bounces along the way. But right now, all the patterns are saying swoosh. It's going lower, and until we see some candle patterns or other patterns that form out here, that is what you've got to look at for your outlook. And if you've got long-term assets out there, folks, now is a great time to be in the king, is to be in cash. Let this market resolve itself one way or the other, because you can always get back in, but don't be wishing you were out of a market that you happen to be inside. So what you're going to have to see by the end of this week is you're going to have to see a close from a bullish standpoint, from a bounce standpoint. You're going to need to see a close in the euro above 1.27 784. If we go take a look at the daily chart, see if there's any glimmers of hope or doom out there. We'll put this off onto a daily chart. And daily chart, here's a dangerous sign. If it closed right now today, what you've got is one of Rick from British Columbia's doji. He owns the dojis. I own the bullish and bearish and hammer and shooting star candles. But Rick owns the dojis. Well, folks, if the euro closed right here, trade out at 1.27316, you'd have one of Rick's dojis. That would tell you that's the halfway move down. Oh, yikes. If we were to go measure what that is, and we can measure it, let's just do it. I'll do it with this. I'll do it in a crude way, I suppose. There we go. That would get the euro. Let's back this up now. That would get the euro all the way down to 121 in a heartbeat. Actually, if that's the halfway move down, it's probably into the 119, 120 area. Market is not closed just yet, but you'll want to pay attention to the euro. And right now, the euro is not giving any signs that King Dollar wants to really pull back. All that the euro has done on the daily chart is making its move by getting down into the swing point from January 16th. But you got to take a look at it more on a daily basis, and you're seeing all closes, towards the bottom session. So that is on the euro. Let's go take a look at Abercrombie and Fitch, ANF, because they have had a income problem. And we'll see how that... ANG, that's not going to work. I got to put it up, ANF. We get back, we'll go take a look at Abercrombie and Fitch. And anything else you'd like, folks, 877-927-6648. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at tfnn.com. Sign up today, because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. You got the Dow trading up 75 points. S&P's up 10. Composite up 18. Small caps up 5. Let's see, leading the charge. You got the S&P's up, leading the charge there in first place. And I believe we've got a horse race coming this weekend. Which one is it, folks? Is it the Preakness that is this weekend? We need our man Phil to call in and give us the lowdown. What is it? Take me out to dinner, or one more time, or something like that. That you can see how much of a horse guy I am. I am no horse trader out there, but should be a good race. We haven't had a Triple Crown winner in one heck of a long time. Now, Abercrombie and Fitch, they're not a Triple Crown winner, that's for sure. I think my kids used to. I don't know if they still buy clothing from these guys, but apparently I'll have another. I like that name. That sounds like me at the sake bar. And you got Abercrombie and Fitch today trading out right now at $40 and change. The market's only been open for 25 minutes. You've got 3.4 million shares. Folks, that 3.4 million shares is really going after the swing point area that's got 8 million shares. Even if I want to use the highest volume down there, that would be 17 million. So it's going to have the juice to blow through another swing point. That sets Abercrombie and Fitch coming all the way back to the June 30th, 2010 time frame. But if we just simply take a look at the smallest ABC pattern that they've got out here, it looks like it's going to blow that B point away today. This is going to get Abercrombie and Fitch. Let's take a look at where this is going to be headed to. You don't want to be in this stock. $16 and change, more likely $6. Holy Toledo. $16 and change will take you all the way back to the November 2008 time frame, folks. That's on Abercrombie Fitch. Let's go back and take a look at the ES Mini. Let's go look at that 10-minute chart out there. As soon as I can find my tab, there we go. And so we're going to take a look at the 10-minute chart. As I said, as it got up into the 1-to-1, A to B equals CD, no reversal sign, you would have stayed in the trade. Swoosh, at the 820 area, moves right up to the next floor, 1.272, no reversal sign of any significance. And sure enough, you go right back up into it with some decent volume here at 950. Now it's headed up to the next floor. What's the next floor on the ES Mini? It's the 1.618 expansion. That's at that 1339 area. If you get no satisfaction, I can't get no satisfaction. No, you can always get satisfaction, especially in these markets. Just let the market prove itself to you. Again, this is a intraday 10-minute chart we're looking at. If it doesn't look like the 1339 area is going to be the area where it gives it up, looks like it would be on its way to 1342. Again, that is on the intraday 10-minute chart. You want to learn how to buy and sell the D point, folks. And if these markets are frustrating to you, we can turn what's called mystery into mastery in a heartbeat. Let's go take a look at the volume inside the ETF structure. Let's go take a look at the 10-minute charts out there. So we can see, if we take a look at the small caps for our man Lou in New Hampshire, who is short the small caps, the swing point that really it's coming into is going to be in the 78.46-ish area, 78.46 works. You have 1.7 million shares. If I draw the line across the bottom, let's see how the small caps are coming into that swing point. Again, folks, this is just simply a 10-minute chart. As you're coming up into that area, you're going to need more juice. Folks, always a pleasure to be with you. I absolutely love being here. I believe Tom and I are going to be doing the Money Masters show, but if not, you've got me. I'll be with you for another hour at least. Hopefully you're off to a great, wonderful Wednesday, folks. Stay tuned. If not, have a great morning. I look forward to seeing you tomorrow morning, 9 a.m. sharp. Take care, folks.
Baby.